Welcome back to Treasury Talks. We have Matt Cole, CEO of Strive, actually our first guest on our new Treasury Talks live stream on Thursdays. Matt, welcome to the show.
Thanks for having me back. Yeah,
Yeah,
after Hong Kong, you didn't get rid of me.
we didn't get rid of you. You keep rolling out new products, so we keep bringing you on. So we're actually here in Miami at the Cantor Fitzgerald event, AI, energy infrastructure, and crypto. We just listened to your panel, Why Bitcoin? You had the OG Adam Back. It had Jamie Leverton from Reserve One. It had Dylan LeClaire from Meta Planet. Also Jack Mallers from 21 and Strike. And you guys were talking about why Bitcoin in general, why digital asset treasury companies. And one of the pieces that we want to start out with is, we're talking about, or Jack Mallers is talking about what they're doing at 21 and their upcoming approach to raising capital by Bitcoin, and then what they're going to do with that capital. And then you're a little bit opposite approach, and we've talked about a little bit. Could you break down just what approaches 21 has versus Asset or Strive?
Yeah, so first, I mean, it actually got into more of a debate than probably any of us were expecting.
Yeah.
But what's important to note is that we're all on the same team. We're all on Team Bitcoin here, and if Bitcoin wins, all of us are going to win, right? Which is very different from I was telling you guys before we started, like the early days of Strive and the debate where I would be debating for capitalism against socialists or communists, and like we were not on the same side of the table of the debate. Like here, we are all very bullish on the future of Bitcoin and then starting companies to ultimately maximize returns for shareholders. And so a lot of people on the outside, they look at Bitcoin treasury companies, they say, oh, there's no differentiation. And I think what this panel really highlighted is actually how big the differentiation and the different viewpoints of how to build an optimal Bitcoin treasury company, or as how Jack would say it, is he doesn't even view themselves really as a Bitcoin treasury company. They view themselves as an operating company. And so the fundamental difference for us is Strive is the only company with preferred equity only amplification, like the N of one in that space. We also have the most amplification from preferred equity, over 25%. We have no debt, no encumbered Bitcoin. That is a massive differentiator. And just to give a sense, that is where, from a capital structure perspective, where strategy is aiming to get to in 2028 or 2029. We're in 2025. So 3 to 4 years that they will get there. And obviously they're the 500-pound gorilla. They've had insane success. We will never have more Bitcoin than them. But I think from a total return perspective, our equity story is extremely interesting if you're a Bitcoin bull. And what Jack Mahler's highlighted for them is that they are not trying to go down that route. He personally, and I think Tether, do not like preferred equity. They actually said that they view it as debt. I don't view it as debt, but they view it as debt, and they want to be focused on building a income generating business, right? And do I think that Tether, Jack Mallers, and SoftBank are going to succeed in building a income business, cash flowing business? I do. I absolutely do. I think they're going to do big things. For us, we're trying to provide amplified Bitcoin. Our preferred equity actually has return of capital, so ROC dividends. Well, do you know what's needed to do ROC dividends? You actually can't generate a profit. If you generate a profit, the ROC dividends go away. And so what you want for us is very controlled, minimal losses to drive ROC dividends, which we think will drive down our cost of capital. So it's like actually like a not intuitive thing that if I were to go to my old seat of CalPERS and say, hey, a Bitcoin treasury company that has operating losses will have a lower cost of capital than one that has income because of ROC dividends. They would be like, what? So it's better to lose. But you obviously don't want a company that's spewing off $100 million losses, right? Like small contained losses will drive down your cost of capital and ultimately drive amplified Bitcoin exposure. So I think from a total return perspective, I think Strive is literally the best game in town. Amplified Bitcoin that no one else has through pref only. And I think what Jack and team are going to do, and they can't talk about what they're going to do fully, right? Because they haven't closed their transaction. But I guarantee you there's a big plan behind what they're going to do. I think they're going to do really big things, and we can debate, who will drive better total returns. And obviously I think we will, and he thinks they will, but that's fun. Those are fun debates to have. And it was fun to kind of get into that a little bit at the conference.
So let's back up a little bit for the audience. So breaking down a little bit of Strive, the prefs you just announced, SATA, had your IPO moment for SATA, and there's been many comparisons to Stretch, which is what I think is July 31st or August 1st, and Strategy's earnings call. They're talking about, oh, this is the iPhone moment for Strategy, a product that's perpetual, that is pegged around $100, pays 10% annually, and it's just a great money market account that like Robinhood should integrate as the way to park your cash. You guys have a very similar product. Talk about it a little bit and how it compares to Strategy.
Yeah, so let me talk about. I do agree that Stretch was the iPhone moment for Strategy, and so it was their fourth pref, right? So they have
Okay.
three other, and I think they kind of learned some lessons from some of the different structures, and what they did was they brought down the effective duration. So effective duration is the interest rate sensitivity of the asset relative to changes in interest rate, how much you would expect the price to move. They brought it down from, call it like a 7 to 10 year duration for their first three prefs down to less than 1 year. And so they stripped down the price volatility tied to interest rate movements while keeping the yield effectively at the same level. And so that is less volatility for the same yield. Volatility is one common measure of risk. So less risk for the same yield. That's super interesting, right? Strive did the same thing with SATA, where we also are trying to target the stated range around 100. We have a little bit wider of a band that will allow it to operate at, but from a effective duration, we actually have a slide on this in our most recent deck that we released Monday. It's only slightly longer than Stretch from an effective duration, obviously more yield. And so it's very similar to Stretch. One of the interesting things is that for us, it's the most senior equity in our capital structure. And we said it will always be the most senior equity in our capital structure, where Stretch for Strategy, they had already given that covenant away in previous issuances, so they couldn't do that. So ours is more senior. It's also got a lower BTC rating because we have more amplification through prefs than they do, but an interesting structure. And then lastly, as a new issuer, we reserved 1 year of interest payments. We already have that set aside to pay the interest for SATA for at least the next 12 months.
So before we get back into 21 and what Jack Mallers is doing, I actually do want to dive in a little bit. So you're issuing your preferred, equity option, and it's perpetual. And you spoke on stage that even at 12%, a great return for the investor, at a 30% compound annual growth rate of Bitcoin, that's still a great deal. That's still a great way to raise capital to buy more Bitcoin. So for you guys, and is it about really like, that seems like a great deal for everyone in Bitcoiners, but is really what you're doing packaging this up to make a better story to TradFi, traditional finance investors of, hey, like you're going to have a senior preference? Because I know Dan Hillary, who we talked about earlier, he was talking about the moving liquidation preference on one of the preferreds for Strategy, was always messing with his mind on like how he should value that. Do you feel like your messaging with SATA is really driven from some of those lessons where you're like, look, we need to have the most senior note, the most senior equity in our stack is going to be SATA. And then here's also like our schedule of like when we're going to pay this out. Like talk a little bit about just that message.
Yeah, so this gets into some of the difference in corporate structure between us and Strategy. So like, one obvious one is they have convertible notes, but important to this question, and we don't, but important to this question is that, the liquidation preferences is that we were able to see some of the market feedback on liquidation preferences, obviously Dan's comments, many other people's comments, right? And so we put in a cap on the liquidation preference at $110, which clearly defines what that liability could be for both the investor in the pref and the common equity, right? Like they know where that could be. There's also a call option for Strive at $110. And so we're, very bullish and want to, continue to grow SATA. But like, if the question is like, could you ever get rid of it? Yeah, at 110. Or we could buy back shares if it was trading less than 110, right? There's ways structurally to get rid of it if we ever felt like we needed to. Now, that said, you're going to mostly always hear me talk about how we're looking to grow SATA, grow amplification, and actually keep this out there. But it's important to have optionality, right? And I think that's one of the things that's missing and still needs to be understood by people is like, if you as an individual go out there and you borrow against your Bitcoin, right? And you look at, name your platform out there that you could borrow against the Bitcoin, and you could probably borrow against the Bitcoin at a similar rate to the preferred equity. But you're posting margin, you have to maintain margin. And so the question becomes, what's your liquidation price? Because you can be liquidated. And so that liquidation risk for an individual doing it on their own, that's great for the Bitcoin company that's financializing that product, that has underwriting by Bitcoin that could take your Bitcoin from you permanently in certain scenarios. For us as an operating company with the prefs, we have no margin. So Bitcoin could literally go to $0 overnight and we will not be liquidated. Now, obviously, if Bitcoin goes to $0, everyone that's invested in Bitcoin in any form loses, but we don't get liquidated. And so that allows us to take a long duration view of Bitcoin. We think it's a long duration asset by taking a long duration liability through the prefs, which are not debt, right? They are equity, which we actually had to talk about on stage today too.
Yeah, you talked about on stage. So when you think about what, CEP, Cantor Equity Partners, looking at this merger with 21, the new company with Jack Mallers as the CEO, you have SoftBank, you have Tether. Obviously, SoftBank has been in the news for a while, and Tether has been this like juggernaut of 60 to 80 to 100 employees now, but makes more money than Goldman Sachs, or more net income than Goldman Sachs. You're confident that they're going to figure it out. They're going to make a really good business model. And it sounds like Jack is really advocating for, hey, I don't want to do any leverage, but I want to make a really good operating business. Do you think it's just unique because they have the capital backing, that they have the optionality because of those partners that they can do that maybe another small Bitcoin treasury company cannot do?
Mhm. Yeah, I mean, it definitely is helpful to have a strong balance sheet in Bitcoin to do it, right? How much Bitcoin do they have? Is it 40,000 Bitcoin,
Yeah.
something like that, right? So you think about 40,000 Bitcoin, that's $4 billion of Bitcoin, right? So what can you do with that starting a business? You can do a lot of things, right? And I think that they definitely will with their connections and their relationship with Cantor Fitzgerald, right? Where I think Tether is like the biggest client that Cantor has because Cantor parks all of Tether's cash in treasuries and has the direct line to the Fed, which is kind of how they develop that relationship over time and help Tether kind of institutionalize and mature, right? But I think the question becomes, and I think as an investor, is what is your view of the future return of Bitcoin? So let's say as an example, you're what Saylor calls a Bitcoin maxi. Like obviously we're all Bitcoin maxi, but from a return perspective, that
Yeah.
you think the future returns of Bitcoin are going to be 30% per year,
Bitcoin is
right, for the next 10 years. Okay, well, what would it mean? So like, let's say we take a Strive leverage on, so we earn the carry between our cost of capital and the future returns of Bitcoin. So if our cost of capital is 12%, Bitcoin goes up 30, our equity holders net that 18%, right? And so we're netting 18%. Well, if you have $4 billion already, which 21 does, and you got to beat, and Bitcoin goes up 30%, and you got to beat Strive that's already got a net 18, what's 18% of $4 billion to start? It's about $800 million. And so you got to take a startup business that does not exist yet and make it into an $800 million business in 1 year. And then you got to do it again the next year and the next year for 10 years. And that's where when I get into my view of, I think that they're going to succeed. I'm sure they have a great plan, but it's very hard to beat just digital credit in the carry trade. Yeah, they have to do all that work to over 10 years probably create a business that, if you think about compounding $800 million at $800 million pace for 10 years, it's not just 800 times 10, an $8 billion business. You're probably talking more like into like a 30 to $50 billion business just to beat what can be done through digital credit. And so do I think that they will win? Yeah. Do I think that they'll make a 30 to $50 billion business? That is tough. And I think that's the power of the prefs, and to say like, look, like if I was investing in a cash flow business or a company trying to do a cash flow business, very few things that interest me more than what 21's doing, but I think it's going to be very difficult to beat just pure play digital credit.
So on the first Treasury Talks, we had to ask you, because your handle on Twitter is @ColeMacro.
Mm-hmm.
What's your macro feeling right now? We're talking government shutdown ending. There's, Bitcoin's kind of playing around between 103 to 107, but people are a little unsure. The seasonality of November being a historically great month hasn't shown up yet. What's your current take?
Yeah. So over the next 12 months, I'm hyper bullish on Bitcoin. I think we're probably 150K to 250K at the end of 2026. Over the next 2 months, I'm less optimistic. I think we might have a little bit more chop left in us. And, I think the government reopening probably is a near-term positive catalyst. But then you go into basically a flat year for Bitcoin into December. And I think there's going to be a lot of opportunities for tax loss harvesting, which creates some near-term sell pressure. And whether the buys outpace that pressure is to be determined. I have little confidence in if December, if we end up, hovering still around 100,000 or if we rip up to 125, 150. But I think the backdrop into 2026 is extremely strong and powerful. And I think I don't like to be too cute into trying to predict what might happen in a month, even if I have a little bit like for Strive, like we're a long-term holder, right? Like trying to outperform Bitcoin over, 4 to 8 years. And so we're just buyers down here. We're super happy to be buying at these prices, which we were able to, buy over 1,500 Bitcoin through the pref, right just over $100,000.
Yeah.
That's awesome. And, hopefully we can buy some more Bitcoin over the course of the next month and a half and gear up for what I think is going to be a very powerful and strong 2026.
Yeah. I think based on what you're saying, 4-year cycle could be broken, but it also, there's the downside of that. It might be broken where it's a little bit lackluster over the next 2 months. Then you have end of year tax selling. But not to be discouraged. We still have great time to get into leaps if that's your game. Also, I think we'll have to bring you back on and do a little more portfolio discussion, because I think there's a lot of good stuff that we were talking about before on just different age groups should really be looking at these prefs as like, hey, here's your right way to get exposure. Don't just buy, the ETF, but like look at income. Look at, if you're in real estate, look at, the 10% or 12% with SATA as a way to be, invested in a Bitcoin related credit product, but you're getting a 12%, income that can like act as your fixed income security.
Different people have different financial needs. And when you take an asset such as Bitcoin that has such a positive future, you can provide the financial solutions for a bunch of different people with different needs. And I think that's what you're seeing with Bitcoin treasury companies like Strive and Strategy that have amplified Bitcoin for people that want that, have stripped down volatility cash flow off of Bitcoin and the prefs. And then obviously Bitcoin itself is still an amazing asset that, all of us need to own.
Yeah. Everyone should own a little bit of freedom money, cold storage. It's you too, Avi. BCA for your kids. Matt, really appreciate it as always.
Thanks, man.